Inflation. It's the silent thief stealing your purchasing power day after day. Everything, groceries, gas, housing, is more expensive than ever. And if you're relying on outdated investment strategies like parking your money in a low-interest savings account or clinging to gold like a pirate, you're not just treading water, you're sinking. But here's the good news. You don't have to lose this battle. In this video, we're diving into 5 future-proof investment strategies that aren't just keeping up with inflation, they're outpacing it. These are the strategies aligned with the biggest trends shaping our global economy. Ready to take charge of your financial future? Let's dive in. Inflation is an inevitable reality, but it doesn't have to be a losing game. Over the past century, the average inflation rate in the US has hovered around 3%. That might not sound like much, but compounded over decades, it can dramatically reduce your money's value. In recent years, inflation has surged, hitting levels as high as 8.5% in 2022. Meanwhile, the average savings account offers less than 0.5% annual interest, leaving your money's growth trailing far behind rising prices. Even gold, often viewed as a safe haven, has seen mixed performance, with value heavily influenced by market trends and sentiment. To thrive, not just survive in this environment, we need to think beyond these traditional methods. Enter the future-proof investments that can outpace inflation and position you for long-term financial success. 5 future-proof investment ideas. 1. Renewable Energy Investments. The renewable energy sector is not just a trend, it's a transformation. As governments worldwide push for net zero carbon emissions, demand for clean energy is exploding. Take solar energy, for example. Over the last decade, the cost of solar power has dropped by more than 80%, making it one of the most affordable energy sources. Wind energy, particularly offshore wind farms, is also seeing exponential growth. And then there's green hydrogen, a promising alternative that could revolutionize industries reliant on fossil fuels. What makes this sector so compelling for investors is the sheer diversity of opportunities. You can invest in renewable energy ETFs. These funds include a mix of top companies in the clean energy sector, spreading out your risk. Green bonds. These are essentially loans to companies or governments for eco-friendly projects, offering steady returns. Individual companies. Leaders like Tesla, Enphase Energy, and NextEra Energy are driving innovation in this space. This is more than just investing in profits, it's investing in a sustainable future. 2. Rare earth elements, REEs. Rare earth elements are the backbone of modern technology. Without them, we wouldn't have electric vehicles, wind turbines, smartphones, or even advanced medical equipment. Lithium, often called white gold, is essential for EV batteries, and its demand is skyrocketing as the EV market expands. Similarly, neodymium is a key component in high-performance magnets used in wind turbines, electric motors, and even headphones. Here's the kicker. The global push toward renewable energy and electrification is making these elements more valuable than ever. Yet rare earth mining and refining are concentrated in a few countries, creating supply constraints and investment opportunities. How to invest. Mining stocks. Companies like Albemarle and MP Materials are key players in the REE space. ETFs. Funds like the Van Eck Rare Earth/Strategic Metals ETF provide diversified exposure to this sector. Specialized funds. Some investment funds focus exclusively on materials critical to green energy and tech. The demand for rare earth elements will only grow as technology advances, making this an investment that's rooted in the future. 3. Blockchain and tokenized real estate. Real estate has always been a cornerstone of wealth building, but blockchain technology is taking it to a whole new level. Tokenized real estate allows investors to purchase fractional shares of properties. No more needing hundreds of thousands or even millions to invest in high-value real estate. Here's how it works. Blockchain platforms like Lofty and Fundrise tokenize property ownership, breaking it into smaller, affordable shares. With as little as $100, you can own a stake in a luxury apartment in New York or a commercial building in Chicago. Click the link below in the description to receive a free $50 to invest on Lofty. But the benefits don't stop there. Blockchain ensures transparency, security, and near-instant transactions. No middlemen, no hidden fees, just straightforward global access to real estate markets. Tokenized real estate democratizes an asset class that was once only available to the wealthy. As this technology evolves, the possibilities for investors will only expand. 4. Water as an investment. Water is one of the most precious and increasingly scarce resources on the planet. Only 3% of the world's water is fresh, and less than 1% is accessible for human use. Climate change, population growth, and industrial demands are putting immense pressure on this vital resource. For investors, this scarcity creates an opportunity. Companies involved in water infrastructure, desalination technologies, and utility management are positioned for long-term growth. Consider these options. Water ETFs. Funds like the Invesco Water Resources ETF focus on companies tackling global water challenges. Infrastructure companies. Companies like Xylem are leading the charge in water innovation and infrastructure. Desalination tech. With advances in desalination, companies like IDE Technologies are finding ways to turn saltwater into a usable resource. Investing in water isn't just about profit, it's about contributing to solutions for one of humanity's most critical challenges. 5. Biotech and health tech innovations. The biotech and health tech sectors are at the forefront of a global healthcare revolution. With aging populations and a surge in chronic illnesses, demand for innovative medical solutions is soaring. Take CRISPR, a groundbreaking gene editing tool that's unlocking possibilities for curing genetic diseases, or personalized medicine, which tailors treatments to an individual's unique genetic profile. These aren't just scientific breakthroughs, they're massive investment opportunities. Then there's telehealth, which has seen explosive growth since the pandemic. Companies like Teladoc Health are making healthcare more accessible, while advances in wearable technology are empowering people to monitor their health in real time. How to invest. ETFs and mutual funds. Funds like the iShares Biotechnology ETF give you exposure to a range of companies in this sector. Individual stocks. Companies like CRISPR Therapeutics, Illumina, and Moderna are leading the charge in biotech and genomics. Health tech platforms. Telehealth providers and digital health companies are reshaping how we access care. The sector combines profitability with purpose, making it one of the most exciting areas to invest in right now. Now that you have 5 future-proof investment ideas, how do you get started? The key lies in taking actionable steps that set you up for success regardless of your starting point or financial background. 1. Remember the golden rule, diversification. One of the most important principles of investing is diversification. Think of it as the ultimate safety net for your portfolio. By spreading your investments across multiple sectors like renewable energy, rare earth elements, real estate, water resources, and biotech, you're not putting all your eggs in one basket. Why is this so critical? Because no single sector or asset class performs consistently well year after year. When one area of the market underperforms, another might excel, helping to balance out potential losses. Diversification reduces risk and provides stability, especially in uncertain economic times. For example, while biotech might see significant growth during periods of medical innovation, renewable energy could shine during a global push for sustainability. Balancing these investments means your portfolio can weather market fluctuations while still benefiting from growth opportunities. 2. Start small and stay consistent. It's a common misconception that you need a large sum of money to start investing. The reality is, you can begin with as little as $5 or $10 thanks to user-friendly investment apps like Robinhood, Acorns, and Wealthfront. These platforms are designed to make investing accessible for everyone, regardless of their experience level. Robinhood offers commission-free trading, allowing you to invest in stocks, ETFs, and even fractional shares of expensive companies, like Tesla or Amazon. Acorns rounds up your everyday purchases and invests the spare change into diversified portfolios, perfect for those looking to invest without even thinking about it. Wealthfront provides automated investment strategies tailored to your financial goals, making it an excellent choice for beginners seeking a hands-off approach. The key here is consistency. Even small, regular contributions can add up over time thanks to the power of compounding. For instance, investing just $50 a month in a diversified portfolio that earns an average annual return of 7% could grow to over $12,000 in 15 years. It's not about how much you start with, it's about starting and staying consistent. 3. Seek professional guidance. Navigating the investment world can be overwhelming, especially when you're just starting out. That's where a financial advisor comes in. A good advisor can help you tailor a portfolio that aligns with your specific goals, timeline, and risk tolerance. For example, if your goal is long-term growth for retirement, your advisor might suggest a mix of growth-oriented assets like biotech and renewable energy. On the other hand, if you're looking for stability and steady income, they might recommend investments in dividend-paying stocks or water utilities. Don't assume that financial advisors are only for the wealthy. Many offer affordable services, and some even work on a fee-only basis, meaning they don't earn commissions from selling you specific products. Robo-advisors like Betterment or Ellevest are another excellent option for getting expert guidance at a fraction of the cost. 4. Investing as a journey, not a sprint. Investing is not about getting rich quickly. It's about building wealth steadily over time. It's a journey that requires patience, discipline, and long-term mindset. Markets will fluctuate. There will be highs and there will be lows. The important thing is to stay the course and avoid making emotional decisions based on short-term market movements. History has shown that markets tend to recover and grow over time, rewarding those who remain invested. If you're feeling hesitant, remember that every successful investor once started where you are now, with a single step. The earlier you start, the more time your investments have to grow and compound. 5. Take action today. The best time to start investing was yesterday. The second best time is today. Don't let analysis paralysis or fear of making mistakes hold you back. Start small, diversify, seek advice, and stay consistent. Every dollar you invest is a step toward financial independence and security. And as your knowledge and confidence grow, you can adjust your strategies to better align with your goals. The journey to wealth begins with a single decision: to start. So why not make that decision today? Your future self will thank you. Inflation doesn't have to erode your wealth. With the right strategies, whether it's renewable energy, rare earth elements, blockchain, real estate, water, or biotech, you can secure your financial future and even thrive. As Warren Buffett said, someone's sitting in the shade today because someone planted a tree a long time ago. The investments you make today can be the foundation of a brighter, more secure tomorrow. If you found this video helpful, hit the like button, subscribe, and share it with anyone looking to take charge of their financial future. Let's grow together. AM Revenue, out.